Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
Hello, everyone, and welcome to the Leaders in Payments podcast. I'm your host, Greg Myers, and today's special guest is Keith Raphael, the co-founder and CEO of Straddle. So, Keith, thank you so much for being here, and welcome to the show.
Hey, Greg. Thanks so much for having me. Excited to chat today.
Great. So before we dive into your career and the company, can you give us a quick snapshot of your personal background, maybe where you grew up, where you call home today, a few things like that?
Yeah, absolutely. You can ask anyone who knows me. I love to say that I'm a New Yorker, right? I spent, I think, all of my childhood and most of my 20s in New York, on and around Long Island, a little bit in Queens and Brooklyn, and spent about 3 years in Tampa in my early 30s, and I've since been out in the greater Denver metro area here in Colorado, which is where we founded the company in 2023, just outside of Boulder.
Okay. Well, if you don't mind, can you walk us through your professional journey and then maybe how and why you started the company?
Oh man, yeah, absolutely. So it's one of those things you never think. I just turned 41, and so I've probably been in the payment space, since I was 25 or so. I think my uncle was a VP at some big public company, and I got a job. And next thing I know, I'm running a payment reconciliation for like every radio station in the country somehow at this Satcom company. So, and I think it was a kind of an accidental career, but I've never left. Briefly, maybe we'll talk about that. But, I really got my start on hardcore compliance. And so throughout my career, I've held designations from NACHA and ACAMS, accredited ACH professional, accredited payments risk professional, and ACAMS AML. So I was really kind of hardcore in compliance. Went and worked for large public bank for a bit and was running kind of scale, acquiring compliance. And that was through about like 2015 or so. And I kind of, maybe it's a little bit of hubris. I kind of was like, man, I think I'm a pretty smart guy, and I don't want to be locked in the basement doing that kind of compliance troll work all the time, right? And so I took a bit of break from the payment space and went and worked at a startup doing unstructured data modeling, which is, okay, we're 10 years too early for AI, or probably would have been out of payments for good. And I think I took a lot of the kind of rules-based flows that I kind of learned in the payment space and applied them more holistically at like the product and strategy level. And so that was a nice little break. And I got drawn back in from a friend of mine who had acquired a kind of legacy ACH processor about 2019 or so. And we came and we turned that firm around. As folks in payments know, sometimes these old processors don't quite have the guts there, the core infrastructure with the acquisitions and things of that nature to really kind of meet the needs of a modern digital economy. And so that's when we left to found Straddle in 2023. And really the reason for that is spending 12,000 hours talking to folks from, chief compliance officers to startup founders of, why is this so hard? Or why do I need to know these rules? Or, why does there keep being fraud? And so I think a lot of folks, follow that old like VC cliche, don't fall in love with the problem, fall in love with the solution. Personally, I hate the problem. I hate that, you have to integrate with 6 different, point solutions to do compliant payments. And I hate the fact that folks are losing money or have a lack of visibility in their flow of funds. And so we like to think that we have some pretty good answers to these fundamental problems for account-to-account money movement. And it's almost like one of those things like, fine, we'll just do it ourselves.
Okay. Well, go ahead and tell us all about Straddle. Tell the audience kind of what all Straddle does today.
Yeah, sure. So Straddle is financial API infrastructure that brings the trust of card networks to account-to-account payments, making them, and when I say account-to-account, ACH, slow, but risky, instant payments, RTP and FedNow, fast, but risky, right? And so what is the common thread there? So our goal is to make account-to-account payments cheaper than a wire, but as reliable as a debit card. And we do that by not just being a payment processor. We like to think of ourselves as a trust layer. So we bring everything from identity and fraud detection to open banking to multi-rail payment orchestration into a single API platform. I think throughout my career, I've learned that money actually moves at the speed of trust. And in the account-to-account space, where you're uploading a file or even an ISO message, there's not that intrinsic identity piece that the card network solved long ago. And so we're bringing that to a platform level that everyone from a two-person startup to a enterprise SaaS or publicly traded company can build on.
Okay. What would you say is the biggest challenge that your company is solving for your customers right now?
Yeah, I mean, rather than go into something like, mitigating risk or fraud, I think we like to think as we're solving that where is my money problem, right? If you know anything about how ACH worked, $86 trillion last year, and not even on direct deposit, right? Consumer internet payments last year were something like $6.5 trillion, more than Visa, right, in the U.S., right? And so it seems strange to us that you can track a pizza to the minute on DoorDash, but folks are like, well, was it a weekend as a holiday? Where's my money? Is it going to clear? Or is it going to settle? So from a first principle standpoint, we solve that question of where is my money for our clients.
Okay. And what would you say differentiates Straddle from your competitors out there?
Yeah, I mean, I think the problem kind of started with the advent of fintech, right? So fintech unbundled the bank, right? Great, banks are good at being banks. They're not super great at innovation, and that's fine. But what that led to was what I call merchants of complexity, point solutions for every little step of the process. And so at Straddle, we don't think of ourselves as a payment processor where our job only kicks in once we receive that API request to move money from Bob's account to Sally's. We actually start from an identity perspective, right? My team hates me, but I like to say people make payments, right? And corporations are people too, at least here in the U.S. So why not care about that counterparty, right? A little bit more. And what we found is that again, in high volume e-commerce, subscriptions, what have you, a lot of these folks out here are trying to piece this thing together. They're trying to get their head around what's the difference between KYC versus identity fraud, right? And what are all these things, and how does open banking work? And so by building this unified architecture, we can move money, at the speed of the internet, as we like to say, reliably. And the folks building on top of Straddle have an opinionated but compliant by default payment stack that they can rely on, and thus focus on building better product experiences there. So we see, again, most in the payment space is worried about the money movement. We're kind of worried about that whole trust ecosystem.
Okay. Well, what are your thoughts on the account to account? I mean, you mentioned some use cases, right? Subscriptions, utility bills, things like that people are pretty used to paying, via ACH or business to business type payments. Mm-hmm. Do you see this getting to where I walk into a retail store and am able to pay with my sort of like they have in other countries, right? I mean, they're able to do that, but in the US, we're kind of behind there. What are your thoughts on that?
Yeah, I mean, that's the $1 trillion question, isn't it? Right. And so, I think today we look at how can we solve these fundamental problems from this 1970s architecture and ACH across a variety of industries. So, our clients include everything from consumer stored value wallets to remittance apps to enterprise SaaS on an embedded ISV type model. All in those industries that rely on ACH. But I think that's just the start, right? As you alluded to, in the US, we've been, blessed and in certain ways kind of cursed from any lack of central bank or regulatory mandate as it pertains to instant payments or open banking, which I think are the two key constructs of truly ubiquitous account to account payments. And so I think we're facing a little bit of inertia from the entities that already have, let's say, a nest egg to protect. So what we see here in open banking, as you may have seen the recent CFPB situation notwithstanding, you've seen Chase come out and put, let's say, onerous pricing on certain aspects of open banking connectivity. And don't want to speak too out of turn here, but I think that the company line there is, hey, like these APIs, they cost a lot to maintain, and we have to protect consumer data, right? Which is logical on the surface. But if you look at their pricing model, they're not charging 10, 100x for the consistent scraping of consumer data via like PFMs. They're charging to get the routing and account number, right? So there's this inherent kind of circling the wagons about that debit card issuance, which is, I think, a good thing. It's like first they fight you, right? And so we see that, the current dominant forces in the market are kind of worried about account-to-account payments being ubiquitous, because with the right identity layer, with the right open banking connectivity, what's the difference between an RFP, request for payment, pushing, and a debit card? Not much, right? And so I think there's a future there, and certainly what we're working towards, diligently. I've recently co-authored a paper, a white paper with the Faster Payments Council about the need for instant recurring payments, that persistent mandate that a user can view and see. And so, we're excited about the inevitable widespread adoption of account-to-account payments, but we're fighting these kind of powerful market forces a little bit as the rollout is kind of industry-driven as opposed to bank or government mandated, as you've seen in Brazil or in India with UPI, and obviously PSD2 and instant payments in the EU and UK.
Okay, I think it's a good segue into the next question, and we'll talk a little bit about the future. So where do you see the biggest growth opportunity for your company, within your segment of payments?
We look at the big long-term picture, right? And so we have these really powerful tailwinds here in the States of, unfortunately, rising fraud, right? And so the better we can build product and tools to help combat that, coupled with an increasing demand for faster, more reliable payments. And so we have open banking-ish, right? Like, but we have the big data aggregators, and we have, I've seen really exciting growth across RTP and FedNow, even at a very limited stage, even with banks being terrified of send or RFP, right? Because of fraud, which is true, but also because, again, we very much like debit card issuance. So we're happy to ride those tailwinds and actually push the industry forward as it pertains to instant payment adoption at the bank level. And, on that note, we're excited to share a sneak peek towards the second half of this year as, we're in the process of integrating directly with the Fed and PCH, just like alongside Fiserv and Jack Henry, to get that direct-to-rail connectivity to power not only our clients' money movement, but also to potentially work with some bank cores. And so the technology is there. I think the product has to be built on top of it, right? As opposed to just having this, hey, there's a rail here, try to use it or not. I think for us, we're happy to solve huge problems in ACH and help businesses relying on this 1970s architecture get their money on time with visibility. But we're really building for that future in which, money moves, like I said, at the speed of the internet, and not just between bank accounts, right? What's the difference between an Ethereum wallet and your local credit union, right? With the right technology, money should just move. And I think, for us, card networks have solved e-commerce long ago, but there's these trillions and trillions of dollars being, almost, there's like a spoke in the wheel of the U.S. economy based off of this, again, fraud versus visibility and kind of hold times on the account-to-account side.
Okay. Well, what does success look like for your company, say, over the next 3 to 5 years? What are those things that when you look at that far, you say, hey, we're successful because we did this or that?
Yeah, I think, we're building a product that should be the default account-to-account infrastructure in the United States, right? We've been, I hate to use the word operating in stealth, but I've never even posted on LinkedIn that our company exists. And just last month, I think we originated something like $180 million in payment origination. There's a clear demand and need for faster, more reliable bank payments, and we're building that trust layer that allows money to move freely between accounts without sacrificing on compliance or risk.
Okay, so you've been in the industry a while. When you kind of step back, what are the biggest trends that you think are reshaping the payments industry right now?
Yeah, it's a great question. I think we've seen a move from the traditional ISO reseller gateway model into SaaS platforms, marketplaces, wallet type platforms become not just distribution layers for payments, but actually key drivers of adoption, right? Folks today, they want to go and log in and pay their kids' tuition or their yoga subscription right from that software. They don't want to be routed to some weird gateway, right? And so we think that increasing financialization of software serves as an exciting ability to reach those SMB and Main Street businesses that are running their company off a CRM, right? Or selling goods in an online marketplace. And so we really obsess over building tools that other companies can build on top of without having to worry about that messy plumbing underneath. And is the ACH operator here the Fed or the clearinghouse, or which rail is it, or anything like that? They just get to deliver an exciting experience to their clients. And so that is, I think, buoyed by I think Stripe's success, but we see it across account-to-account payments too, not just the card network, the card acquiring. And then I think, elephant in the room is, stable coins, right? All the hype around that. Let's just say that, I've been a big believer in distributed ledger technology. I mean, for years. I run my own Ethereum validator, but I think we track this. I think we've been asked once or twice this year for stablecoin money movement. I think it's an exciting thing for corporate liquidity and maybe cross-border transactions. But I think the consumer or the end user use case isn't quite there yet. We're hoping that I think there is that killer app one day to help that. But if you look at the power of like an ISO message done right, it's not all that different from a stable coin, except you have money instead of a token.
Okay. So a couple of final questions. So if you could go back and give yourself advice at the start of your career, what would that be?
Oh, man. Yeah. Run away. No, just kidding. I would say listen to your customers and listen to your users. We have one of our values is, see people, not users. So forgive me for saying that. But I think that's what's most important when you're talking with a merchant or a technology provider or a marketplace, what have you, and they're feeling frustrated and friction, or they're confused because of these. We all have a few copies of the Nacha rule book somewhere in our office, right? They're not quite sure on why that if they're charging their customer the customer is a receiver. I think listen to them, right, and see how you can build your product or company with the intent to solve those problems. It was very easy, especially when I was kind of more compliance focused, to be like, oh, well, there's, this is not a proper authorization, or there's not a proper logging here. When it's really like, come on, guys, this is all pretty absurd if you're, just a well-to-do business owner. And so I wish I had a little bit more of that empathy early on. But I think, again, after thousands and thousands of hours of hearing it, you realize that something is broken, and we wake up every day and try to help solve our customers' problems in a way that works for their business, and hopefully we can make a few bucks too.
Okay. So final question, what's the one thing that you would want someone who's listening to this episode to take away about Straddle?
Yeah, I mean, I think the message that we want to convey is that it doesn't have to be difficult or confusing or scary to stand up a payments product. For too long, it's the onus has been on the merchant or the originator or again the business owner to kind of figure it out. We think that building an opinionated, intentional, compliant by default stack that basically abstracts both the direct to rail complexity and the half a dozen integrations on the top is the way that things are moving in this industry. And so when you're faced with difficult decisions around compliance versus open banking, kind of think about like, why doesn't this stuff just work, right? What are we really doing here? And that should not be just for account to account payments, right? That should be for most things, right? When you're being kind of nickel and dime across the entire life cycle of again running a business, you just think that something seems wrong here, and it's probably a great idea for a new company. But I think that folks who are brilliant at building accounting software, or running yoga studios, or whatever, should do that, and then let folks who are passionate and a little obsessed about these dirty problems with compliance and money movement help. And so I think that's a real way to help both scale the economy in terms of kind of money movement, but also just have better outcomes as a client, customer, partners.
Yeah, you say that, and I think of like Square that many years ago, I don't know how many it's been, really simplified pricing, right? They had the one rate, the 2.7 30 cents or whatever it was, that everybody blew everyone's mind that anyone would do that. Right. And Stripe comes along and says, hey, whatever it was, one line of code and you can accept payments, right? They took complexity and made it simple and built big businesses around that. And it sounds like kind of your mentality and your thought process around what you're doing is somewhat similar. Do I have that kind of right?
Absolutely. It's a funny anecdote is I think I was at a Notcha conference maybe 10 years ago, right? And I think it was in Austin. But I was talking with some folks, on the kind of ISO acquiring side, and I was like, man, what do you guys? Stripe was probably worth a few $1 billion there, but they weren't Stripe yet, right? So I was like, what are you guys gonna do about Stripe? Are you seeing this? You can onboard and register for production access, but you can be approved for a merchant account in minutes. And they kind of laughed at me, and they're like, what? They're like, Stripe is a PayFac. They could never compete with us on price. That was their thing, is that we'll always go, interchange plus 3 basis points, plus 2, plus 1. And they kind of commoditize themselves out of a job and a business, right? Whereas Stripe, on the other hand, really was customer obsessed and problem obsessed, right? And they're like, screw it. No interchange plus unless you're enterprise, 2.95 and 30 cents. We don't care if it's a debit card. And people lined up to pay them, right? Because they help solve these problems that folks were having running their business. I think there's a lesson there, right? Where if your big moat or whatever is being cheaper, then it's probably a reason why you're cheaper, right? There's been a lot of consolidation in the payment space, especially on the card side, and I think you'll see a rebundling of sorts more broadly out of kind of these, again, very, I hate to say merchants complexity, but let's just say point solutions into a little bit more intentional and sometimes opinionated product. For us, it's interesting. It's like, account to account payments. Like, what does that cost? 3 cents, right? But actually not really, right? There's a lot of elasticity there. If you can provide, this kind of first principle of like, I'm a business that relies on bank payments, ACH, maybe one day RFP to run my business. I want to be paid fast and reliably, and I'll kind of pay for that, right? And so I think an interesting learning that we've had is, we've built really outstanding, highly complex but abstracted technical products. Instant, like machine learning, name matching, payment tokenization, open banking connectivity. And we have to be proud of that. Then we show a potential client or partner our dashboard, and we have like a little pizza tracker of money's left the straddle, money's at the operator, money's been debited from your customer account. And then that whole process, and like, this is amazing. This is the best thing I've ever seen. I'm like, guys, not that cool. But really, that's the thing. Is like, that those little moments of like, hey, I don't have to think that, well, what time did I originate this payment on Friday? Was it a holiday weekend? It's not open, right? That kind of unlocks excitement and like a trust in they're going to get paid. They can ship the good or release a deposit on the rent on a rental or something like that, right? And so if all you're doing is replicating a Notcha file or an ISO message uploaded to their bank, it is worth 3 cents. But if you're solving problems about reliability and consistency and finality in money movement, then I think it's a much different conversation. And I think a lot of the payments industries can learn from those early Stripe and Square lessons and focus more on first principles rather than being a bank with an API.
Yeah, totally agree. I think, Keith, this has been a great conversation. I really appreciate you being on the show today. I know your time is incredibly valuable. So again, thank you so much for being here, and I really appreciate getting to know you and learn more about Straddle. So again, thanks for your time.
Absolutely, Greg. It's been a pleasure talking to you. I got a whole bunch of backlog of your episodes to catch up on now, and wishing you all the best, and hopefully we'll talk soon.
Okay, thank you. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.